Well, they're not trigger happy, but you say perhaps they should even put the pedal off, take their foot off the pedal.
Well, I mean, clearly this is the unreliable boyfriend. A month ago, when everybody thought that rates were going to rise, the market really had it fully priced in. I said at the time, well, where's any data that actually sustained it? So even then, there was no data. And then since then, the data has worsened. And I found a really big puzzle when you read through the inflation report. Basically, they didn't move. They said it's all about the weather. But when you go to the ONS and look at the official statistics, the ONS said it's not really the weather at all. So I think it was a real puzzle for everybody. They're looking complacent again. It certainly appears that there's a great deal of weakness in the economy. GDP growth at 0.1. I think I probably would have voted for a cut.
You'd have voted for a cut. I'm looking at some data. You were saying, where's the data that's supporting any of this? I'm looking at a Bloomberg chart now that shows how we have seen inflation tick downwards. And as they said today, inflation's actually going to be coming in lower much faster than expected. But we're also seeing wage growth had started to creep above inflation. But you've really been looking at wage growth and in fact, the lack thereof. And you're saying perhaps we shouldn't be looking at this data of unemployment now. We should be looking at underemployment.
Well, I think we should certainly be looking at underemployment, which has not returned to its pre-recession levels. It's underemployment that really matters. And actually, if you look at the data, we've actually, despite the fact that people keep saying that wage growth has picked up, if you actually look at it, it's actually started to decline. Over the last 3 months, the number that you have from the official surveys are 513, 513, 513. So that doesn't sound like a wage pickup at all. And the argument that the bank has made actually is in the last 20 forecasts, and they still continue to do it, they keep saying, but it's at a relatively low level now, and it's about to pick up. But this has been 20 forecasts in a row, so their credibility, I'm afraid, is really somewhat diminished. And the market, I think, has taken that view. So I thought a lot of today was really puzzling. How two people could possibly vote for a rate rise based upon weak data, some potential that the economy would actually head into recession. It looked to me like an unbelievably foolish move. So two people voted for a rate rise. I think the evidence probably, it was clear that probably the decision should be a stay steady. But there are arguments strongly actually for cuts.